Welcome back to the best prop for you trading floor. Today we are breaking down the Euro USD as we head straight into another highly anticipated non-farm payrolls report. Before we dive in, I want to remind you of the video that we did last month right after the NFP. It played out even better than we expected. If you traded that setup, you likely made serious progress on your challenge. The link is right up here on the caption, and I hope that you were able to capture some gains. Now, if you are trading a prop challenge with best prop for you, today is about patience and precision. We're looking at a market that is aggressively expanding to the downside. Why aggressively? Because the upper band is actually pointing up, whereas the middle and lower bands are looking to the downside. But with the NFP data looming, a trap is highly possible. Let's break down the macro drivers and the technical map. First, let's talk about the data. The NFP expectation today is just 59,000 jobs added, which is less than half of the massive 130,000 surprise that we saw in January. But here's the real secret. Watch the revisions. Historically speaking, high readings, especially in January, get revised lower. So if that 130K number is revised down, even a slight bit today, let's say to 70K, is not going to move the needle for the dollar. If the data, on the other hand, disappoints, we could see a massive short squeeze sending Euro USD straight up. And where are we pointing at? We are looking at 117.30. We're looking at the median line even at 117.82.83. But of course, we thought breaking that low over here at 117.40, the risk of further declines is remaining actually at high levels. So unemployment and earnings, on the other hand, are expected to remain unchanged. What you really need to keep in mind moving forward is that the Fed might start ignoring employment data, or not ignoring, maybe way less, because geopolitical tensions are actually bringing inflation back onto the stage and becoming the primary threat once again. For today, the jobs numbers, of course, are still the catalyst. But let's not forget, with the Euro USD already weakening due to the energy shocks coming out the Middle East, a better hot NFP is going to be a double whammy for Euro USD, because it's going to actually align the technicals with the macros. So let's look at the daily chart. We have been looking, the trend is to the downside and it's aggressive. If we do break lower down, we are looking at the 161.8 Fibonacci next. Okay, that means that we break the previous low at 115.28, then we break the previous low at 114.69, and then we'll go down for the 161.8 at 114.13. Let's call it 114. This is also the low that we saw back in July 2025. Now, as I said, volatility is very important contextually here. Both of the bands are looking to the downside, pointing to the downside, while the upper band is actually pointing up. Why is this important? Because when that happens, it means that volatility is expanding, which typically is an indication, a signal, early signal of further continuation to the downside, since both the other bands are looking down. The RSI is dropping, is close to the 30%, has not yet gone to 30, but it doesn't really have to go there. There is still room to go, but if you compare to the previous RSI lows, we haven't really gotten there. So is a correction due? It's really going to depend on the NFP. Now, we measure this move down to identify some sort of targets in the I would say medium term. Okay, and we have identified those levels. But for trading the NFP, of course, we need to go really and drill down on the 1 hour chart. What we currently see an actual some sort of consolidation here. We see that the bands are both flattening, okay, and this is expected ahead of the NFP. Typically, to be fair, what we don't see, which is unexpected, is a move as such to the downside. This is actually a pre-positioning ahead of the NFP, and we're moving away from the 116 handle. Whether, of course, we're going to revisit that or not is going to depend on the NFP numbers. So we currently have a local support at 115.60 and resistance at 116.20. Okay, and I would even go ahead and say that 116 at the median band is very important as well. So since we have fallen quiet from the 117.41 breakout point, the current price action looks like a simple correction, okay? But NFP loves to create false breaks. Let's not forget that. We might see price flash down to 115.23 over here, okay? And maybe like 5-10 pips below that level, and take out liquidity before reaping higher. And that could happen ahead of the NFP, actually. So the entries, if the data is hot, look for entry triggers around 115.80, okay? Well, it depends on how that's going to pan out, but 115.70, 80, perhaps even 115.60. Or if we break structure lower at 115.59, okay? 60, yeah. Now longs, if the data misses or revisions are bad, look for a reclaim of 116, okay? Then 116.20, and then a full breakout above 116.30, heading towards the 116.50 resistance we see before. However, the macro picture is to the downside as long as the Middle East conflict remains. At best prop for you, passing your challenge is about knowing when not to trade. Do not guess the NFP number. Wait for the initial spike. Let the 1 hour candle close. Let these few hours show you where markets is pointing towards, and then trade the structural break. Whether we flash 115.33 or squeeze back above 116.30, the market will give you a clean entry once the dust settles. Stay disciplined, manage your drawdown, and trade what you see. This is Best Pro for you. Trade smart, and we will see you in the next breakdown.